Yeah. Masumo satu dal Mr. Mrio Singh.
Okay, let's start with part 2. Now, part 1, the summary of part 1 is that you understand the formula. How do you calculate the money management formula, right? In terms of how many lots you should play. Let's go a bit more advanced, okay? Now, what if when you enter a trade, let me give you the example, okay? If the market has reached either profit target or stop loss before you enter the trade, what does that mean? So this is an advanced concept, all right? This sentence means, remember just now I taught you, if it turns up here, I told you this is a good place for you to buy, right? What if you were not there? Maybe you were at work, you are playing with your children, you have a business meeting. You know you are supposed to buy here, but because you were busy, you didn't look at the trade, right? Every trade has entry price, profit target, and stop loss. Now, Advanced Money Management Part 2, I'm showing you how to manage your trade. As an example, if the market has reached either profit target or stop loss before you enter the trade, abandon it. Meaning to say, you are supposed to click buy here, okay? But before it reaches that point, maybe the price went down to the stop loss. It didn't turn up to your entry price. It went all the way down to your stop loss. What should you do? So, for a short trade, this is the example, okay? I will go a bit slow. When you go short, this is your entry price, okay? This is your entry price, right? In a short trade, if you know you are supposed to enter here, but the markets went down to reach your profit target first. If the market went down to reach the profit target, and then it goes back up here, don't trade. No trade. Or, if the market has reached your stop loss position, you know you are supposed to enter here, right? You know you are supposed to enter when it comes down, but it has already touched your stop loss level already. If it has already touched your stop loss level before you enter the trade, abandon it. Means no trade. Okay? Because it has already reached this level. So let's look at this example more specifically. This is for buy. So when the price is going up, and I told you, once it turns here, this is a good place to click buy. And once you're supposed to click buy, this is your profit target price, this is your stop loss price. But now the price, instead of turning up, it went down to your stop loss level already. Okay? That means abandon, there is no buy trade. You understand? Okay? Similarly for, so this is for the long trade. When you go long, this is your entry price, this is your profit target, this is your stop loss. Okay? So similarly, this is what I mean. When price has gone down, okay, it has touched your stop loss first before it goes back up to your buy. If it goes here, you click buy, perfect. If it went down, then it goes up to buy, don't touch the trade. Because it looks that it had already gone down. So whether it has touched your stop loss price, or whether it has, before coming down, maybe it has already gone up to your profit price before coming down to your entry, no trade. Okay? It must touch your entry without going to the profit level, without coming down to the stop loss. If it touches here before going to the entry, meaning it has crossed your profit target price before coming down to your buy price, no trade. If it has gone down to your stop loss price, then it goes up to your entry price, no trade. Okay? Now, second scenario. If the market has not reached either your profit target or stop loss, but it is between entry price and stop loss. So example, if the price between entry and stop loss, okay, so before crossing the stop loss price, that means now the trade is here. The trade didn't touch your entry, didn't touch your stop loss, but now it's here. It's going up, okay? The previous example, it crossed the stop loss, go up, no trade. Cross the profit target, come down, no trade. Now, it is between here, between the buy entry and the stop, meaning it has gone here. What should you do? What should you do? Put an instant order, meaning to say you take the trade immediately. Okay? So example for a short. Let's look at a short. For short trade, you know entry price is here, profit target is here, stop loss is here, right? Short, you always make money on the way down. Now, you know this is your entry price. Maybe you were not there. You were busy, you were playing with your kids, whatever, right? You were at work. You didn't take the trade. You are supposed to take at this price, this level. But after you open up the chart, you look, now your trade is between the stop loss and entry. It is between here. Okay? If it is between your stop loss and your entry price, whoops, what happened? Stop loss. Okay, listen. Now I'm trying to be very practical. You are supposed to take at this price, but sometimes you are not there, right? When you open up, oh, you missed the trade. You see, when you miss the trade, the price is either going to be between here or between here. I will show you both sides what to do. First scenario, if it is between here, all right? If it is between your stop loss and your entry price, you are supposed to take the trade here. Now the price has gone here. What should you do? Put instant order, meaning to say you enter immediately. Okay, let me show you both cases, then I'll draw for you. Make it simpler. So, just remember this. Whether you are going short or long, if the price is now in between your entry price and your stop loss, so for a short trade, that means the price is here. For a long trade, means the price is here. You are supposed to enter here, this level. But you missed the trade, now the trade is going towards your stop loss. I want you to take the trade immediately. Here's why. Okay? I know it's a bit more advanced. Let me show you the examples. Okay, watch. So short trade. Entry, profit, stop loss. This is your trade. You were supposed to enter at this price, maybe 1.3655, example. But you missed it. You opened the platform 10 minutes later. The price is now here. You're supposed to enter here, but you miss it. Now the price is here. What should you do? My advice to you is you take the trade immediately. Why? You were supposed to enter at 1.3655. The price has gone up to maybe now 1.3665. Okay? No doubt you are nearer to your stop loss. But this is a better price compared to your friend who took it here. If your friend took the trade here, from here he starts from 0. Right? 0 to maybe 30 pips. If you take here as your entry, by the time it reaches here, you are already plus 10 pips. Do you understand? This is an advanced technique, okay? I repeat again. I'll keep on repeating it until you understand. In a short trade, if you are supposed to take at this price, 1.3655, for some reason you are not there, okay? Now the price is between entry and stop loss. See the chart there. The price is between here. It's now 1.3655. Don't wait until it drops here before you enter. You don't need to. You can take it immediately. Because you were already supposed to enter at this price. Now you've got a better chance because the price is here. You were supposed to enter here already. But when the price gone up, after you take it there, and when prices drop, your friend is at 0 pips, but you are already plus 10 pips. Do you understand? Very good. So, whether you take long or short, so this is short. Let me show you the long. This is stop loss. This is entry. This is profit. You were supposed to enter at 1.3655. Okay? For some reason you are not there. The price is now here. The price is 1.3645. Whenever the price is between your entry and stop loss, take it immediately. Click buy. Here, click sell. Why? Because your friend who took it here, he starts from 0. If you took it here, and now prices go back up again, you are plus 10. Understand? Okay? Now if you understand this, let me give you another point. In most cases, you're supposed to risk 2%, right? If you find yourself in this situation, where now the price is between your entry and your stop loss, okay, you don't have to risk 2%. You can risk lesser. Why? Profit, entry price, stop loss. Most cases, you will risk 2%. Okay? Assuming this is 2%. Maybe this is 2%, 2%, example. If you find yourself here, now the price is between your entry and stop loss. You don't have to risk 2% for here. You can risk 1%. But you risk 1, you may make how many? Trading is always about controlling your risk. So if you find yourself that you are between entry and stop loss, and if normally you are risking 2%, do not risk 2% in this case. You don't have to. You can just risk 1%, but you may make 3. Clear? Okay? Don't have to. Why do I want you to risk lesser? Because, number one, it is already going near to your stop loss. You're not sure. Maybe it will hit your stop loss. You're not sure. So if it is between here, it is a better price, but risk less. Risk 1, you may still make 3. You don't have to risk 2. Okay? Clear? Very good. Now, if the market has not reached profit target or stop loss, so just now, the price is between entry and stop loss. Now let's consider, let me write the whole thing. Let's consider if your price is between your entry and your profit target. Okay? Just now, the price is between your entry price and your stop loss. 2 things to remember. Number 1, take it immediately. Number 2, risk lesser. Okay? These are the 2 points that you need to be clear. Now let's consider the other side. Okay? So let me draw the 2 scenarios for you. Just now, we talk about long. Okay? This is stop loss. This is entry. This is profit. Your price is here. You take now. For short, entry, profit, stop loss. If your price is here, you also take now. Now let's consider the other side. Okay? Stop loss, entry, profit. What if your price is now here? And for short, entry, profit, SL. Now your price is here. Do you see the difference? You are supposed to enter here, but your price is between stop loss and entry. You must do 2 things. You take it immediately, you risk lesser. Okay, this part is clear. Huh? Now, what if you're supposed to take it here, but it's already moving towards your profit target? What should you do? Anybody? Yes, okay, so the answer is... Oh! Why like that? Put pending order. Okay? You must always compare with the... You must always tell yourself, if you take the entry here, are you at a better price than the guy here? If you take the trade immediately, you are at a better price. Because if you take here and now it goes back up to entry, you are maybe plus 10 pips. Right? You will be plus 10 pips. So that's why you take it now. But if you take the trade here, if you take it immediately, you start from 0, but your friend is already plus 10. So if you take it here immediately, it's not a good decision. Because if you take here immediately, your risk is more than your reward. Correct? Here was good because your risk is less than your reward. So it's a good decision to take it immediately. Here, you will be risking more. If you calculate here to here as 2%, you maybe will make only about 0.6%. What for? It's not a good decision. So in summary, if your price is between entry and profit target, wait for it to come back down. When it is here, 2 things can happen. Only 2 things. Number 1, either the price will go up and touch your profit target. If it goes up and touch your profit, too bad, you missed the trade. Never chase after the price. Are you clear? Okay? You never know whether the trade will touch your profit target or your stop loss. You just don't know. So if it is between your entry and profit, wait. Put a pending order at the exact same entry price. Hopefully, it drops back down to touch your entry, then it goes up. If it doesn't, if it continues straight to your profit, you miss the trade. Just look for the next one. you will have many, many trading opportunities. Don't worry. Don't worry whether you miss 1 or 2 trades. Okay? Never chase after the price. Similarly, so this is for long. For a short trade, when it is here, when price is already here, you are supposed to take it at the entry, but price is already here. Never chase after the price. Because if you were to click sell now, your risk is more than your reward. So it is never a good decision to take the trade immediately when it is between entry and profit. Wait, put a pending order at the entry price. Hopefully it goes back up, touch, come back down. If it doesn't go up, if from here it just goes back down, doesn't matter. You miss 1 trade. You will not take every trade every time anyway. Okay? Very good. So here's the example. You can draw it in your notes. You were supposed to take it at your entry price, but for some reason you are busy. Okay? The price is already moving towards your profit target. Never chase after the price because your risk, remember your risk is always measured from your entry price to your stop loss. Your risk is more than your reward. If you're going to calculate here as 2%, you only make maybe 0.5%. It's not worth it. Similarly, for a long trade, you're supposed to take it here. Okay? It is already in between your entry and your take profit. If you were to calculate 2% from here to here, okay, this is more than from here to here. You will end up making less. So you never chase the price. You always wait for the price to come to you. Okay? Always get in at a favorable position. So in summary, friends, if your trade, okay, now let's talk about the 2 longs. If your trade, if the market price is between stop loss and entry, take it immediately, risk lesser. Okay? If it is between entry and profit target, wait for it to come back down. Now, do you have to, when I say wait for it to come back down, means you put a pending order. Right? On your platform, you can put a pending order at this price. You don't even have to look at it. When market is up there, you put a pending order below there. Okay? So when the price comes down, it will just touch your entry. You don't even have to look at it. You can put a pending order. For short trade, if your price is between entry and stop loss, okay, it's now here, take it immediately. Okay? Risk lesser than your normal. If normally you risk 2%, risk 1%, risk half of it. Okay? Because you got a favorable risk to reward ratio. If now the price is between entry and profit target, never chase the price. Okay? Wait for it to go back up. Take a pending order. If it doesn't go back up to touch, if it just comes all the way down to profit, doesn't matter. You just missed 1 trade. You didn't make money, but at least you didn't lose. Clear? Okay? Now, let me teach you another concept. What is risk to reward ratio? In fact, the whole of the money management segment, I've been teaching you about risk to reward ratio. Okay? Risk to reward ratio simply means how much you risk compared to what you make. That's all. It is a ratio. Okay? It is the distance between entry to profit and entry to stop loss. Okay? If you write 1:1 means if you risk 30 pips, you make 30 pips. If you put 1:2, risk to reward, meaning to say, if you risk 30, you make 60. 2:1 means if you risk 60, you make 30. Out of these three, which is a better one? One is to 2 is better, right? Then some of you may say, Mario, why don't we take 1:3? Why don't we take 1:4? Why don't we take 1:10? Why? It's a good question. Okay? Let me explain. This is called 1:2. So if you risk 30, you take 60, right? So of course you may think, but take more is better, Mario. Why don't we take 1:3, 1:4? The most logical answer is, it may not reach all the way to 1:10, right? So 1:2 is the best. Once it reaches there, take your profit, get out. Compound your account, go in again. Okay? Markets will never trend in one direction all the way. If you recall in the morning, remember I told you it may go up, then it comes back down. Because people who buy here are taking profit here. It will never travel in one direction all the way. Right? So, a risk to reward of 1:2 is good. That's why all the articles that I write, I always take 2 positions. Forget about taking 3 or 4. Don't have to. Very simple exercise. Now, tell me the answer. If you have a stop loss of 30 pips, profit target of 30 pips, what is the risk to reward ratio? 1:1. Very good. Stop loss 45, profit 90. 1:2. Risk to reward of 1:1. If you risk 3%, what is your profit and loss if you hit? +3 -3. Simple, right? Good. So you understand the concept. Risk to reward of 1:2. If you risk 2%, if you hit your profit is 4, you hit your stop loss is 2. This, to me, is one of the best ways. You just catch one trade like that in a month, you make 4%. If you make 2 winning trades in a row, this is my rule for you. Imagine this, okay? Next week is already April. I will fly back home to Singapore. You guys may start trading. At the start of April, if you hit 2 winning trades in a row, stop trading for the whole month. Because you would have made 4%, 4%, right? If you hit 2 winning trades in a row, you would have made 8% in a month. But the big question is, are you able to stop trading? Maybe difficult. Maybe difficult. So let me jump ahead. April. Trade number 1, if you make, you hit 4%. Trade number 2, if you make, you win 4%. My rule for you is, if you can make 8% in a month, stop. This may happen by 2nd of April. By 2nd April, you look at your watch, I've already made 8%. How do I stop? The whole month got 28 more days. Right? You may tell yourself, I made 8% in 2 days. I can be a millionaire by the end of April. Right? It is all these thoughts that go into your head that will cause you to fail. The Forex market is not an ATM. Doesn't mean that you tell yourself, today I got no money, I want to make some money. You can also lose. Do you know you can lose? Do you know that? Yes, right? If your trade is here, if you don't do anything, your money is still here. If you trade wrongly, you're now here. You are worse off compared to if you didn't trade. So not trading is also a good decision because you don't want to trade wrongly. Okay? Now, before I forget, let me tell you a good concept. Remember I told you my goal for you is to make 6% a month. Because 6% a month compounded 12 months, you make 101% in a year. This is the goal I want you to do. Okay? What if you had 2 winning trades, you are already up 8%? It is always the next trade that is most important. So let me give you some advice what you should do. The first step I want you to do is to stop. But not many people can stop. Okay? So let me give you another solution. You are up 8%. The next trade, if you cannot stop, you just risk 2. You risk 2%. Because if you lose, you are down to 6. The next trade, if you lose, it will definitely make you think, oh shit man, I was supposed to make 8%, now I'm already 6, I better stop. Right? So the next trade is important. Play the next trade, no problem. But if you lose that trade, you better stop already. Now what if you win? You are 8, if you risk 2, you may make another 4. You may make 12. If you make 12, if you are now up 12, I will allow you to go again. Put aside 10. Keep 10. Risk 2. Maybe you make again. Right? So this is proper money management. If you can stop at 8, no problem. You are already ahead of your monthly goal. If you can't, one more trade. You lose, stop. You win, put aside